love Keith Endo said, "Good morning, Eskimos." That is what today is feeling like. And it's funny because the song that I was just playing was called Pool Party. Kind of ironic. Walter, who I'm going to introduce in a minute, said it probably should be like an ice skating rink instead of a pool party today. But either way, we will take it. We appreciate all of you being here with us on this Monday, President's Day Monday. And I am excited because this is going to be a great day to talk about something very exciting and something that's super important to all of us, right? Which is really making sure that you are taking care of yourself and taking care of your taxes as an independent contractor. So on that note, I would love to introduce my two fabulous guests. I've got the amazing Wendy Rosen and Walter Cosmo who are joining us. I know some of you have had the opportunity to meet Wendy, Walter, their team. We've got Robin Miner, who is a phenomenal asset to their team. Charlie Rosen, who many of you know as well, all part of Mark Jacobson and Associates, and just have been a great partner for us. Gosh, I don't even know, over the past 5 years, is it now? So we really appreciate more than that. 8, 7? What's the number, Wendy?
8. I think it's 8.
Gosh, time flies when we're having fun and talking about taxes, right? And financial health. So anyway, I really appreciate having these two fabulous minds here with us this morning. And what we would really like for this to be is, they obviously are going to share some really great nuggets, and we're going to kick off kind of this Q&A conversation, but this is also an opportunity for all of you in the chat. If you've got questions or come up, please make sure that you are sharing them in the chat because we want to make sure that we are answering everything you need to be really feeling comfortable as you move forward in your world of taxes, savings, retirement, and just financial health overall. So let's get into it. One quick thing I do have on here is this is the QR code. I'm going to just leave it up for a second. If any of you want to scan it, it is going to, and I'll put it up at the end as well, but it's going to create an opportunity for all of you to take that first step, which can be so important. We're going to talk about that today, but the first step in taking action as it relates to your financial security and your retirement and just your savings health overall. If you scan here, it creates an opportunity for you to sign up for, I think, a 30-minute consultation with the team. So on that note, what I am going to do, though, is I'm going to stop share so we can see these fabulous people much larger here right now. And I'm getting some feedback. I don't know if that's because you have something else on, like a second, something on your phone or anything. If not, I'll just ask you a question and then sort of mute myself. All right, so Wendy and Walter, I would just say let's kind of get into what I think are some pretty important questions that agents have. And what I love is that both of you have successfully supported realtors over many years. I don't know, Debbie Glickman says that's my bestie, but you've helped so many realtors go from probably a place of nervousness to a place of really kind of taking control of their future, their savings, helping them figure out how to manage their cash flow. Let's start off with this question. What is the most important thing that you've learned since working with realtors?
Thank you, and good morning, everybody. So I would say that the most important thing that I've learned over my last 30 plus years is really the mind shift or the mindset shift from being a realtor independent contractor to being a business owner. And once that shift happens, it's a completely different game because now we're looking at it as a business. And what do we need when we're running a business? We need to make sure that we're protected. We need to make sure our employees are protected. We need to make sure that we are covering our income is protected. We need to make sure that we're setting up, for all intents and purposes, a board of directors, because we can't possibly know everything. And we can't be embarrassed that we don't know everything. That's why realtors have inspection people and mortgage people and title people, because they don't know everything about it and they don't need to know everything about it. They just need to have a team or this board of directors to make sure that these areas where they are experts are making sure that their business and everything is focused on one goal. So I think that first and foremost, making the shift that you are a business owner and not a realtor and not an independent contractor and not just selling real estate, because that's not what you do. You have to protect your brand and you have to protect and make sure that everybody on your board of directors is focused on one goal.
And I think I'd like to add also is the mindset changes, having a separate checkbook, having separate credit card statements, and start to, identify you're producing a widget. Let's just go to basic fundamentals, going back to basic college. But we have to evaluate what goes into that widget, how much time, how much energy, what do I have to modify to get the end result? And taxation really has a significant role in all that. Because if we don't know what our taxes operate like, because I have an accounting background, so I can, take a shot at accountants. Accountants have blinders on. And I walk in and I, hand a packet of information, and my accountant is engaged to do one thing, and that's to reduce my taxes or focus on 2024 tax year. We have to change that mindset for the accounts to start focusing on what does 2024 look like, what does 2028 look like, what does 2020, 30 look like, what is the year that I'm going to plan out my business strategies? Because most business owners, when they go to a bank or they have a 1 year, 3 year, 5 year mindset. Well, that incorporates how do I structure my business, my LLC, my S corp? What am I doing? Because you're a business within a business. And once we change that shift, now when I look at these dollars and I write the check, sometimes it's not painful. Because we have to look at some of these expenses that I'm paying for isn't an expense, but treat it as a deferral of my earnings so that I have earnings in the future. Because nobody, when we walk through Walmart or we walk through any of these Costco's and we see the 80-year-old person working there, it's not because they want to be working there,
Right.
the old adage, they failed to plan. But, we talk about this all the time. We talk to our kids, we talk to younger kids because, when we were kids growing up, they always like, hey, this is an adult conversation, go sit in the other room. And I know when we did the one company, we did the same type of seminar with, I brought my daughter with, and we went through this whole tax strategy. And she was supposed to be handing out brochures and handing out this and getting business cards. And we got done. I'm like, you didn't do anything. What were you here for? A free lunch? And, she said something really powerful. She said she didn't learn any of this in college. She didn't learn this in high school. There was no communication. She goes, so I had to learn, on the go type of thing. And she goes, it was so informative to understand all this information that was powerful. So I think this is an opportunity, as you said, create a board of directors. If you don't have a board of directors and you're a small startup company, sometimes we outsource services, right?
Correct.
I need a CFO. I need somebody who understands taxes. Engage your accountant. I know we've said a lot of people will pay their accountant in June for 45 minutes to an hour. Say, I'm going to pay for an hour's worth of your time. That's your CFO.
Correct.
And, you're not spending $300 an hour for that CFO, every single hour that they're there, but they engage them and you train the system says, this is when I do my taxes next year, we start to think differently. But I think that really adds into retaining and hiring partners within the organization.
Yeah,
Yeah.
and in addition to that, going back to the basics, what's your income? What are your expenses? Have you actually looked at what your expenses are 3 months ago, 6 months ago, a year ago? What are you spending on marketing? What's your return on your investment? These are all very specific things that you have to focus on, being a business owner, being attentive to it, making sure that you're accountable to your board and your board is accountable to you. And once you know where your income and your expenses are, then you can tweak it. Do you have enough money this year to spend on marketing? The other thing that is also very, very true is, could you set up a short-term loss? Maybe not go on a vacation this year, maybe not get a new car. For a long-term gain, maybe put some of that money back into your business for marketing, because you know that the top 4 realtors in your office or in your region did that little shift, why, you don't need to create the wheel. You don't have to reinvent sliced bread. You have to look at what other people are doing. And I feel like everybody coming back into the offices after the pandemic, I mean, I know I'm going off shift here for a second, but hearing what the top people are doing and seeing what the top people are doing, success leaves clues. So I think, we both think that making that mind shift to being a business owner and setting things up, and there's so many partners and so many teams that are part of At Properties. If you have a teammate, what happens if, God forbid, something happens to that person? They get ill, they have an accident, and their part of the pie is now not happening because of them being off. What are you doing to plan for that? What are you doing if there's an early death? What are you doing if there's an early income shift? So you have to plan, and all of these go into being a business owner.
Well,
I
and we
guess-
talk a lot about that, is ultimately being CEO of your own business. And I think there hits a point in time where agents who've been in the business long enough where they start realizing that, right? But I think, it's never too early from what I'm hearing from the two of you. So let's say somebody is in the business 1 to 2 years, hasn't done that much. It isn't too early for them to be engaging these folks. So tell me, who should be around the board table? Like, let's say, I'm newer to this, or this is a concept that I'm going to start engaging in. Where do I begin? Obviously, we need an accountant. Obviously, we need somebody similar to the two of you that can help from more of the longer term strategic planning, right? What do my finances look like? What's my retirement option look like? What else should be, included? What should people be thinking about?
I think an advisor, a counselor, an attorney should be somebody that understands the business. But I did this presentation 5-6 years ago, and for a speaking engagement company. And I gave the example that I had to prepare for my presentation. So I stayed in the hotel. I was in New York. So I stayed in the hotel that evening. I didn't go out. And I ordered food in, and I ordered a calzone. And they delivered the calzone to my hotel room. And I was starving. And I cut into this calzone. And inside of the calzone, there was cheddar cheese, pepperoni, and gyro meat. All together, it was an abomination. Independently, they were great. But when we combined it, it was really not the outcome I wanted. So whoever took the order screwed up the order. God forbid, I couldn't imagine anybody ordering that combination. But when you put together that team, you really want it to be a cohesive team, right? You don't want the accountant to be fighting with the planner. You don't want the accountant and the attorney disagreeing on things. Interview these people, because they're going to help you succeed. And they're an instrumental part of your, behind the side scenes practice. They're the person that you can call and say, hey, this is a situation, this tax year, your accountant should be the one doing this. I know for our clients we call, this is the year you should put more money into your Roth. This year you should be doing more of this. This is what that team is supposed to be doing. I don't care if you've been in the business 2 years or 20 years, tax laws change each year. And you need somebody who's efficient, and not only efficient in taxes, is efficient in understanding
your industry. It's the most important thing, is to make sure that you're not getting, you wouldn't hire a corporate attorney to do your divorce, and you wouldn't hire your real estate attorney to do, your corporation. So make sure that they're focusing on you, and that you all sit and meet and are accountable to each other. And I think, talking about how to plan for your taxes starts with meeting with an accountant, making sure that they understand how independent contractors in real estate work. An accountant can be very helpful, but if they're not specialized for your industry, do they know all of the things and all of the deductions, and focusing on making sure that you're being the most tax efficient?
All right, so I've got a great question in here. Sorry, I know we want to address stuff that comes up in the Q&A.
Yeah, no, that's great.
So what is the easiest way to track deductible expenses?
It all depends on who you're asking. If you're asking Wendy, she's going to use a CRM system. If you ask me, it's a notepad.
Okay, so written down somewhere.
I use QuickBooks, and I log every single thing in. again, short-term loss for a long-term gain. It does take time to set things up, does take time to set up the categories. It also takes time to set up what's deductible and what is a gray area that you can have a conversation with your accountant about.
Right.
Would this
To
work
add to
this
that,
year?
what is your take on hiring a bookkeeper? Because I think that was one of the biggest things that helped me, because I'm not great at tracking everything myself. I kind of just throw it somewhere and I want somebody else to kind of figure it out for me. So is that somebody that people should consider on the earlier side of their career?
I would say that the simplest form of any type of tracking is, how does my statements get generated? So I have 2 credit cards. I will not use my business expenses with this particular card. Everything with my black card is personal use, the red card is business use. So I don't even make the mistake. At the end of the month, at the end of the year, I can download a statement and upload it into Microsoft Office. And I know that every transaction that's occurred on this statement is business related. There is no question. So that when I give the information to my accountant, what's important is I'm gonna give them all the information, because the other stuff is non-tax efficient. There's no reason to look at it. You don't have to know how much I spent on personal items, because I can't use those for my taxes. I have 2 different checking accounts. Well, I have multiple checking accounts, but if I write a check,
Business
right,
specific.
if I write a check out of this, that's to pay the mortgage. This is to pay property taxes. This is to do this. These are the taxes that I use, so that everything is done. I don't need a bookkeeper for me. I have an accounting background, so I can't spell bookkeeper, but I mean, I can, I don't need a calculator. But when we look at it, just treat it as a business. When you're walking in there, just say, this is my office, this is my shop, this is my business. Well, I wouldn't write a business expense out of my personal checkbook. So if you start thinking that way, sometime around June, it's going to start to flow. So, oh, wow, okay, I'm my own business person. I have 2 separate checking accounts. I have a business. At the end of the year, when I walk in, I can just download all the transactions on that credit card, itemize them, list them down: business, entertainment, meals, car expenses, gas, tolls. You can put them all in a category and hand those to your accountant.
And I think a bookkeeper would be supportive for more detailed and, getting more into the weeds and more categorizing. A bookkeeper can be very helpful, especially if you want somebody to pay your bills and organize your income coming in. I think bookkeepers are fantastic. I have one as well, and I really rely on them. Again, the bookkeeper has to be aligned with what you need. And so short-term loss, long-term gain, take some time for yourself. We're going to talk about this a little bit later on, but really making sure that you are setting up a plan and you're accountable to yourself and they're accountable to you. So if they're not doing something right, you need to say something, and that's your fault for not training them the right way.
Right. I mean, you're going to have to do some investing. It's like anything. It's like where you get somebody to come in, maybe clean your home for the first time. It's like they need to know what you like, what are the specifics, what matters to you. So, and I think back to your point, Walter, I think there are 2 classes. There's somebody who may be more inclined like you, where they can put it on 2 credit cards, and at the end they can export everything and feel comfortable that they can manage with that piece. And I think there's another group where maybe a bookkeeper will help keep them on top of things, right? So I think it's a matter of, knowing which way, as my own self running my own business, how am I going to work? So we've got a couple of other questions before we run on to our next question about retirement, but one is for a CAP event, so a client appreciation party. Is it better to log the expense as meals and entertainment or as marketing?
I'm going to defer to the accountant over here.
So the tax laws did change for meals and entertainment, because it's only 50% for deductions. So you're better off making it a marketing event to get 100% of the tax deductions.
Okay.
And that's a fantastic question, because again, what we do has an impact on our effective use of our money. So if I understand my taxes, I understand how to deduct them, and engage with an accountant who works with 1099 employees, not W-2 employees, then they understand how to code that event.
Yeah.
But great question.
Great, thank you.
Great. Awesome. Then one other question. I know this comes up a lot, but when is it a good time to incorporate? Go from being, just regular taxes to maybe S corp, right?
Well, the advantages of a corporation, there's a couple of advantages. One of the biggest ones is to shelter liability, right? That's one of the big things. When you go into a corporation, there's different tax strategies. Again, I think income really drives a lot of it. How much threshold do I have before it makes sense? And again, that's where you start to interview your accountants to see when is the right time for them to say, you know what, you're at a threshold now where it makes sense to start building up a corporation.
Because of the potential liabilities, and that could be, business interruption, it could be a lawsuit, I mean, it could be a whole host of different things, but once that liability gets above what our E&O covers, right? And that, also brings up another piece, is that because there is no workman's comp, you have to have business liability insurance, you have to have E&O coverage, that of course we all do. And, making sure that we had a call with a client last week, and he was concerned about hiring practices, and, was he covered for that? He wasn't an independent contractor, but just, things that come up, we don't think about until something comes up. So it's always good to have those conversations as well.
Yeah, great. So let's talk a little bit, because I know a big part of what you all do and really help agents with is, obviously the in the moment, how do I run my business and my cash flow better? But I also think there is a big focus on the future and what retirement looks like. And I know for, many agents, and look, I sold for a number of years, and, sometimes you have great years, sometimes the years are not so good. There is not sort of that consistency. And so I think retirement sometimes feels like a hard thing to accomplish. So tell me, what are some of the things that you're working on with agents out there so they can actually plan for retirement?
I think the most important question, just like if I'm showing a home, I have to understand what that home has to look like, right? Do I want a 4-bedroom? Do I want this school district? And those are the questions that you guys ask. The questions we ask is, what does retirement look like to you? Do you want to live a lavish retirement that you have the choices and the freedom to travel? Do you want a moderate retirement? Do you want to live a very simple lifestyle, just want to, not have to work? Do you want to retire someplace that, healthcare costs continue to skyrocket? We know that. And if you have the choice to say, I'm going to retire in Tennessee or New York, and you have underlying health issues, the cost of reimbursement rates are based on the zip code. So again, when we go into retirement, we'll start digging into, where do you plan on retiring? So once we have an idea that says, okay, it's 18 years out, here's inflation, here's where you're going to live, we have to start deferring a portion of our earnings or our savings into a vehicle that's going to have enough cash flow to generate assets and income during that period. And more importantly, where I'm going to live. If I'm a state that's tax-free state, that's a little different. If I have a state that I'm going to live in because that's where my children and grandchildren are, and there's higher costs for medical reimbursements, I have to be sensitive to that. So it really is a lot of planning, but it's understanding the basement or the foundation first and building upwards.
And App Properties, as many of you are very aware, is focused on making sure that that process is easy. So not only can you save for retirement and have monies go into a solo K or an SCP or a Roth or an IRA, but they also give you the opportunity to withhold money for taxes for your estimates. Again, planning, you have to pay your quarterly estimates. All independent contractors should do that, and App Properties makes it, this isn't a commercial, but truly App Properties makes it so easy for you. So many of you are already withholding 20 and 30% to go into the money market account, so that when your accountant does call you and say, hey, you need to write a check for 20 grand, you've got that set aside, and that's part of the planning. So really making sure that you sit down and meet with somebody, and those goals change all the time. I mean, when Walter and I were young and way younger, and just starting out, and neither one of us were married, that was, our goals were different. Then you get married, then you have children, or then you get divorced, then you have grandchildren, all of those things, all of that is tweaked. And it's no different.
Does your husband know about the whole divorce part yet? Have you told him that?
Right.
Where did that come from?
I'm just saying. No, not at all.
Okay.
Thank you very much.
That's a nice
It's
red.
really nice.
But I love it because I do think the one thing that's so important is taking that step. Because I know for myself, if I don't, out of sight, out of mind, right? So I
Yeah.
think if you can also, as an agent, put a system in place where you are automatically paying yourself first. So when you are getting those commission checks, there's already a piece that's automatically being deposited for taxes and for savings, so that by the time you get whatever remains, that's what you get to work with, right? I think that's kind of step number one. Because I think for so many of us, if it's just all of a sudden sitting in our bank account, I don't know if many of us are diligent or disciplined enough to do it ourselves to move it somewhere else. I know I sure as heck am not. So, but you have to take those steps so it automatically happens. And, again, we've partnered with you for 8 years, and there have been a lot of agents that have really had great opportunity to save, to get back on track. And the thing too is for everybody, and anyone who's sitting out there feeling like, I don't know where to begin, or I'm too far behind, or I'm too far down a rabbit hole.
Never.
You never are. There's always opportunity. And I know even for myself, there's been times where I feel almost embarrassed about, I feel like I should be in a better spot based off of what I think everybody else should think about me. And I think it's important to kind of get out of our own way to take that first step forward, because that's the best thing that you can do for yourself, right?
And we have a very simple, honestly, very simple process. We have an income and expense sheet, and many items on the expense sheet don't apply, but a lot of them are just kind of memory joggers. And when Walter was talking about downloading his credit card statement, and you download and it kind of categorizes it, and it says pharmacy or drugstore. And the thing about Walgreens and CVS, their marketing and placement is the pharmacy is always in the back. So as you're walking down the aisles, oh, there's cotton swabs, and oh, there's nail polish remover, and oh, there's mascara, and there's hair. And then, your bill is $120, but your copay was only $5. So you have to make sure that you do that. And when I go to Walgreens, I use a personal and a business credit card. And split it up. They get very annoyed with me, but it is what it is. But making sure that you understand your income and your expenses, and the pay yourself first is really what so many people forget about. They're like, okay, I got to pay my mortgage, I got to pay my rent, I got to pay, insurance, but really you have to pay yourself first.
That's great.
I think one of the things that, has evolved from 30 and 40 years ago, for anybody that's been old enough that knows what Rand McNally was, I know when I started in the business, I would go and do a map quest, or I'd do a map, and I'd put it in my card. There it is. The problem was the map didn't say there was a roadblock. There wasn't construction.
Correct.
As we evolve today, technology's evolved. I get in my car, I just say, take me to XYZ location, but my map will reroute me because there's an obstacle up ahead. And today, when we look at retirements, what are our obstacles? Before it used to be, well, 70% of my earnings, and if tax laws change, I'm just going to continue on that path. But when we look at obstacles today, we have so many tools that says, hey, you know what? Tax laws have changed. Let's redirect you. Let's shift some of that wealth into a different bucket, because it's going to have greater impact in retirement, which I think is fantastic, because there is a lot of strategies moving forward.
Yeah. So talking a little bit about retirement, let's talk about, I think, something that might be on a lot of people's minds, or maybe not as much, but this whole idea of Social Security. I know all of us have paid into it, and, we were actually talking about this idea of, is Social Security actually going to go away? What are your thoughts on it? And is there anything that an agent should be thinking about right now as it pertains to their Social Security, to be proactive, to make sure they're saving enough, so that when it is time to tap into it, it is, going to benefit them?
Well, I think that this is a great segue to talk about math, science, and biology, because if we're talking about Social Security, that's the end result. So, first and foremost, to answer the question, Social Security is not going away. It can't go away. It's a deferral of our earnings. It's not a tax. Can it look different? And is it going to look different from everything that we know in our industry, yes, it's going to look different because the government has not shifted or rerouted itself to make plans for us living longer, for us working longer, and for people, if you're living longer, you have more chances of being in retirement 15, 20, and 30 years. My grandfather died at age 70, and he was in retirement for 5 years. My grandmother lived 10 days shy of 100 years old. So she was utilizing Social Security. She had worked her whole life, but she was in retirement for a significant amount of time. And people are living into their hundreds, and we need to make sure that that money is going to be around. So planning now, and I'm going to let Walter talk about this kind of formula that we've been talking a lot about to make sure that our retirement doesn't get derailed.
Yeah, and I've got regulatory background. So what that means, I don't know. I sat there and I listened to Senate meetings. I was there listening to some of the nonsense. I don't think that we will ever see Social Security leave. It can't. It will guarantee a civil war because again, it's not a tax; it's a deferral of our income. But what's more important about Social Security is the myths that are there. I don't understand it. Somebody told me to do this, somebody told me to do that. There's 3 things that you should incorporate in retirement strategies, and that's it. And every time I said this when I was in school, that I didn't need this, when I was there, the nuns used to crack me in the knuckles with the ruler because I said I didn't need math, science, and biology growing up. Well, you know what? I was wrong and they were right. So, and I'm waiting for the pearly gates to open one of these days for me to admit that. But math is the number we need, right? I need a 7% return. I need 6%. That's basic fundamental. Take a calculator and calculate it. The science is the scientific approach. How do we build a portfolio that incorporates the risk, incorporates the need, and to make sure that your tolerance is really at the forefront?
And the time horizon too.
Well, the time horizon, everything goes into place. But biology is one that I know a lot of advisors, and we've been doing this a long time, that really neglect that question. And the biology piece is, how long do I expect to live? If I'm single and it's just me, and I have life expectancy of 70, why would I wait to 70 to turn on Social Security? What's the point? Take it as soon as you can. Now, if you're your grandmother and there's longevity in your family, and by taking it at 62 or waiting to 70, you might leave a $500,000 on the table. Why am I neglecting that? Why am I not reading those statements? Why am I not evaluating those? We don't tell anybody to make a decision, but you got to evaluate the numbers. It's right there in front of you. It's simple calculation, simple formula, present value, future value, the outcome, and find that sweet spot and understand what are the provisions for my family? What are the provisions for my spouse? If something happens to me early, I want to make sure that they can maximize those benefits. If I'm older and I have young kids, I can turn on income and then my children get income. So there's a lot of advantages in Social Security. And I think that's one of the biggest takeaways. If you can just, SSA.gov, with the Paper Reduction Act, they're not sending out statements that like they used to. Sign up for it. You'll get it once a year. It's such a fantastic plethora of information there, but it helps clarify the decisions you need to make today for tomorrow. And I know we talked about a loss. It's not a future loss. It's just a deferral the way we live, or a slight change, so we can still maintain that lifestyle we want in retirement. And I'm hoping that they'll make something out of Social Security. There's a lot of talks again about Social Security. There's talks about stop paying taxes on Social Security. There's just a lot of communication about that. Stay in the forefront of it. Engage your advisor. Make sure they understand it, just like your accountant. Your accountant doesn't understand it. If they're not understanding Social Security, how can they really be your financial advisor to plan your retirement? So,
And Walter and I don't know anything more than the average Joe about the Social Security statement. We just know where to find the information. So one of the takeaways is definitely go to www.ssa.gov. That's going to be your foundation, because we know as the crow flies today, if you're 62, full retirement age, or 70, that's what your numbers are. As you continue to earn an income, those numbers will adjust. And we use that as the base for what we're going to receive. If we already know what our income is, and we know what our expenses are, and we know what they're going to be approximately in retirement, and we have a shortfall, that's where the other retirement plans that you're contributing to, a Roth, a 401k from a previous employer, a SEP, an IRA,
Real estate income.
real estate income from investment properties, all of those monies are then going to be used to backfill what we need, and everything else is a cupcake with frosting and sprinkles.
Right, right. So I think really the point of it all though is, and I know that I did this a few years ago with you all, but to go to SSA .gov first and foremost and find, at least figure out where you're at, then take the steps to engage your accountant, engage your financial planner, and make sure you're all on the same page about longevity, how long I'm going to need to tap into these dollars, and if I need to tweak anything on the front end to make that something that can be impactful down the road, right?
Correct.
All right, love
Absolutely.
it. All right, so
And really what we, sorry, one last thing. What we want to do is we want to, that pay yourself first amount. We want to take that money today and make it work for us in retirement.
Got it.
So paying yourself first is great, but leaving it in your savings account isn't going to get you to retirement.
Right, right. Let your money work for you, right? And make more money on top of what you've already got.
Make
So
more.
I love it. All right. So we, coming out of this, have first step is to develop a plan, right? And that's a great step number one. I know it is appointing your board of directors. So as we get off of this call today, everyone, I see many people looking to get the expense sheet, looking to figure out where can I sign up for a consultation. So I love that so many of you are taking that first step forward. But any additional pro tips as we come out of here? So it's appointing my board of directors, going to ssa.gov. What else should people, as they're coming off of this call, be thinking about to make sure that they're taking that best first step into retirement and just even financial success?
I would say a good takeaway is anything that you own, like Wendy's got a pen in her hand. Who ultimately should have that pen? Who should ultimately have the assets that I own? Make sure that the people I care about are earmarked on those accounts.
Mm-hmm.
So make sure your beneficiaries are accurate. We often see people have it. They don't know, engage in your partners, your spouses, whoever your business partner, if they've got to talk to them about everything. So we have a buy-sell agreement. If something happens to me, something happens to Wendy, our business would be altered. Make sure that you have an understanding with your partners on everything.
Right. And check those beneficiaries. I heard a story about somebody who was divorced, remarried, they passed away, but the first wife was the beneficiary on all of the accounts.
Mhm.
Yeah,
Mhm.
yeah. I didn't need to be at that meeting. That was a little contentious.
Yeah.
But please also make sure that you put a will together, as Walter's talking about. Make sure that you have a will, so when you are of sound body and mind, that you can say, okay, my son gets this pen, my daughter gets these earrings, who gets the house, who gets the car, and just make sure that you take care of yourself, because if you're not taking care of yourself, you can't take care of your clients.
Yeah, and it's a tough step, but it can be really critical, right? Because there is a level of, I think, security once you've taken these steps and made sure that you're not just protecting yourself, but you're protecting everyone in your
Well,
world.
and to your point, Kathy, it's making sure that you don't feel behind the ball,
Mhm.
right? You've got some sort of plan in place.
So
Yeah.
I would say to do that, just go into your personal calendar, whatever calendar you use, and schedule a meeting with yourself once a month, half hour. That's your financial checkup once a month, and you're not being disturbed. And once a year, the month of your birthday. So it's easy. If I'm born in November, it's scheduled once a year. Have a comprehensive meeting with yourself, right?
Mhm.
That's when you take in-depth look at your Social Security statement, navigate what you're doing. And listen, I've been doing this 40 years. I do it myself. In the month of November, one weekend out of that month, I'm really taking a dive at my pensions, look at my assets, and make sure that is there anything that needs to be updated. Can Social Security be wrong? Can they have the wrong numbers? Absolutely. And if they're wrong because they picked up the wrong accumulated value or earning value
Yeah.
in that calendar year, then it's going to be wrong in Social Security. Then my output is going to be wrong. So schedule a time with your financial checkup for yourself.
And you'll see on your social security statement, if there's a zero, or if you're historically, 100,000, 100,000, and then it's 4,000, there's a problem. We need to address it before you go to social security and say, okay, I'm ready.
Right,
Mhm.
right. So you never know. It's being proactive, I think, is the key here. And what I love right now is we're giving all of you the opportunity to be proactive by going on and scanning this QR code. It's going to allow you to take this very first step, which is to sign up for a consultation. Just have a conversation with Wendy, Walter, Charlie. Just take that first step to get educated. And even if you think you already have your board of directors or you have it all figured out, or maybe you even have some of your team in place, the beauty of MJA is they are our partner. Even if it's just a consultation, even if it's just for them to say, hey, the people that you're working with are taking great care of you. Here are a couple things to think about, but here's what I would go back and ask them. This is, a complimentary resource to all of you at App Properties. So take advantage of it. And, to Walter's point, you owe it to yourself. We always say, put your oxygen mask on first, right? Because if you don't on the airplane, you're no good to anybody else. So,
Did you
take
really have to
that
use that?
30
I'm getting on a
minutes.
plane in a little bit. Did you really have to? Did you really have to put that on the universe?
It's all good, Walter. You'll be A-okay. But I want to say
Fine.
thank you so much to Wendy and Walter.
you.
Finances are an important thing, not always like the craziest thing to talk about, but I really appreciate you bringing this to us, in February as we're moving into a new year, and really helping our agents start thinking about how to be more comfortable, more protected, and more solid in their futures.